God damn it. I fucked up. Hold on. Let's start over. All right. Welcome to Sunday Sermon. With the
we're gonna have to work on that.
Yeah,
we're gonna have to work on that.
That was a test one.
Oh, fuck.
All right, so welcome to another Sunday Sermon. I am Justin Banks, your host, and we have no risk, no premium, Chris. We are not financial advisors. Anything we do say shall not be taken as financial advice, opinion, and entertainment only.
Yes, sir. What is up, everybody? Hope you had a great weekend. Very, very fun week last week that we had. Thought we navigated it very well with the minutes meeting that came out. We were all pretty focused. I think as long as you didn't overtrade, you probably had a pretty good week because we had call out after call out after call out. Shout out everybody that did call something out and made money or just gave out any sort of information or answered questions. We truly appreciate y'all. It's what makes our community, makes what our community is, separates us from everybody else, man. We just have a place where everybody wants to win, and we want to continue to grow that. So thank you guys for an amazing week. And now this week, listen, I wish I could sit here and be like, all right, this is definitely going to happen. Because, like, motherfucker, if I knew exactly what was going to happen, like, we'd all be rich as fuck, okay, if we knew exactly. So we don't. But what's what we do know? Basically, this week, go to the Fed. Yeah, let's just look at the economic data and with Fed. We'll see what's going on. So basically, the minutes meeting was this, guys. Was we might do from 3 to 4 rate hikes between now and 2024 at 0.25 or 25 basis points per. So that would put us about 250 for the rates. So that's super, super high. Now, what they also did was talk about the balance sheet. Okay. And when they started talking about the balance sheet, that's what really, really, really got everybody's attention. And this is it. Just go down a tad. Yeah, you'll see it right there. The 11th. Yep. So what that did was basically scare the pants off everybody. You saw the rates, if you're watching the 10-year, spiked like crazy. The bank spiked with it, but everything else pretty much got crushed. We had a tech wreck. And it looks like inflation is a little bit more out of control than they really think. So all these reasons is we had pretty much 150-point drop on SPX, which is about an 11-point move on SPY. We pretty much went from 479 to 468. I think we closed at 466 or something like that, though, on Friday. That little last-minute rug pull would make sense for them to end the week like that. But yeah, I mean, what happens from here? Well, guys, as far as like a watch list goes today, I don't really have an amazing watch list for you. And here's the reason. We have Powell talking right here on the 11th that you see it on Justin's screen. He has a testimony with the Senate, right, at 10 a.m. So it starts at 10. So listen, what happens whenever Powell speaks? The market kind of freezes. It chops. It goes back and forth. It doesn't do much until he's done because they don't know what he's going to say, right? So after that, then after he speaks, then the next day, Wednesday, we have the CPI data year over year that is going to come out that next morning at 5:30 a.m. or 8:30 Eastern, 5:30 Pacific, my time. So I'm expecting a ton of volatility, but I don't know which fucking way we're going to go. Okay, I got no idea. Does the chair, does the Powell even bring up anything that had to do with the minutes that came out last week on Tuesday? I don't know. Is inflation actually better and lower? That comes out on Wednesday. I don't fucking know. All the analysts are saying is going to be higher. They're saying in the 7s. Okay. Then the next time Powell talks after Tuesday probably isn't going to be until the next FOMC, which is January 26th or 27-ish. I think it's a 2-day thing. So, guys, I mean, SPY is super simple. We could go over SPY real quick. I mean, this is what we'll know. What happened after the drop last week on the minutes? It was pretty much after it got down through 470. We knew after it got down through 470, we knew if it didn't get back above it, what was going to happen? It was going to go lower. So, guys, that level right there, like 470, 89-ish or whatever, yeah, we have to get through there, okay? We have to get through there. We didn't. And if you look at the week, what is this, the 4 hour? Yeah. Go to the daily. I want to see what those two candles on the daily look like. Yeah, I mean, that looks like a pretty bearish setup to me, right? That looks pretty bearish to me. That looks like that trend line could possibly get tested, which I know is right around that 462-ish mark, really. And you guys know, if you did I did the Fibonacci retracement on the Friday Lotto call. You can go check that out. The 61.8 fib retracement level was about 462. So that would make sense. That would give us about 4630-ish on ES, which is the S&P futures, would give us about 4640 on SPX. And now the futures right now, although they don't matter till the morning. They were down momentarily. They got down as much as 15 or 20-ish. They are back up. They're about -6 right now. So they went down and tested, pretty much got lower than Friday's low. Friday's low was 4655-ish. They got down to 460.50. They literally kissed it, and now they bounced back up there, 4661 now. Right. So underneath, pretty much think about this. Underneath 465, it's got another 3 points down on SPY. Even just looking at Justin's chart here, almost perfect. But Justin, what do you notice? Yeah, you got your cursor over it. I mean, right there. You're just playing a typical MACD cross, right? I mean, that's it right there. You got the cross. Now, do we get under the signal line? Justin, let's check out what the moving averages are doing real quick. Just do the 50. 50, 100, 200, and the 20?
Yes, dude. 20.
You did 20.
No, let's do 22. Nice. So
okay.
Pass below 20. I mean, they're not crossing. The 20 cross the 50. Yeah, so I think if the 20 no, this 20 crosses the 50, and then it'll definitely signal more bearish.
Well, look at the 50-day moving average. It pretty much saved the entire week, really.
Yeah.
I mean, it hit it and it held, which was good. But closing right on it like it did, right? And now we've got Fed talking and CPI data coming out this week. I mean, I don't know.
Well, I mean, weeklies for what? 460 would probably pay if you took them tomorrow. At the beginning.
I mean, I would look. It depends okay, I'm going to say this, but it doesn't matter. And I don't want anyone to get biased on it, but just judging off the futures and what's happened this week, it's been a pop and fade every time. So a pop up to 470 or 4,700 on ES can't get through, and they fade it right back down. I wouldn't expect anything similar. It's an old fashioned bear trap and flush, right? That's what I think is possibly going to happen tomorrow. So we're going to chill. Let the market tell you what we're going to do, right? Don't fucking try to predict anything. It'll get you clapped. It'll get you biased, focused, and that's not what you want, right? You just want to have clear direction, and then we bank, right? And then we bank. But I mean, a triple bottom would pretty much be where that 100-day is too. What's that? That yellow one? 455? Yeah, that would be nuts. Okay, Kapil says, is the 4 hour on SPY a bear flag? Okay, go back to the 4
hour. Yeah, I would say the run up right here to the drop. Yeah, that'd be that
was technically a bear flag. It's I mean, if it's not a bear flag, it's a drop, consolidation, and a close lower. I mean, the 4 hour, we've got the actual cross on the MACD there. You know what I mean? RSI, we're due for a bounce, it seems.
Ooh, but we have the 20 cross the 5. Look at that on the 4 hour.
Oh, wow.
That's nice. That's good.
That's interesting.
For the downside. Huh. I mean, everything's pointing that's going to hit that trend line.
Yeah, I mean, I would think that 461 is definitely an area I would be looking at. But you don't, guys, like, just like you don't play calls on the breakout because you'll probably get faked out. You don't buy puts after it's fucking dropped, you know, however many points, right? Wait for the bounce, right? Let the premium get in your favor. Then you buy when it's cheap. And if it goes and retests that low, you make bank, right? Same thing at the top. If it goes and it couldn't, remember, I was like, guys, it can't get through 470. Well, it went through 470 on like Thursday and it jumped up like 80 cents or something like that, or like 90 cents from there. Everyone's like, oh my God. And let's buy calls, let's buy calls, let's buy calls. The next 5-minute candle, it was back below 470. The old fake out breakout, right? All those calls got crushed. Okay. So this is not a week. This is not a week to swing a lot of things, in my opinion, really. This is a week where we have 2 events. We have the Fed and we have the CPI data that came out. And after the FOMC minutes made it very volatile. This is still a smash and grab. This is still a fucking rob the bank and don't stick around to see if the goddamn cops show up, right? This is take your money and get out. This is one successful trade in the morning is all you fucking need. That's it. That's it. You guys see me. I give out 1 call in the morning, maybe 2. We bank, and then I'm fucking done. I'll get my coffee, grabbing a bagel. I'm going in the Discord, watching you guys overtrade and screaming at you. You know, I mean, like, I'm trying to tell you, you do not need to fucking be banging out, scalping all day long. It's just, it's not good, especially if you're a newer trader. Now, there are people in the Discord that can do that and they do it well, but that doesn't mean that you should do it. That's not your strategy. Have your strategy, stick to your strategy. Okay. I challenge everybody this week. You plan the trade and you trade the plan. No setup, no trade. Very simple. No setup, no trade. That's it. Okay. I don't want anyone losing money because they got greedy or they have FOMO. Like, oh man, I didn't make money last week. I got to make this. Nope, that's not it. If you have that mindset, you will lose more money. I promise, especially with the data that's going to come out this week, right? Just let it show us what we're going to do. Wait until we get up to 470. And if we fail it, then we load the boat to the downside. But we're going to have to wait. We might have to wait 2 days. We might have to wait till Thursday. You could have waited all week till the FOMC minutes came out. I called fucking 47.80 puts, right, on the fake out. They went 7 to 72. 7 to 72. You could have had one trade the whole goddamn week. $700 go to $7,200. You could have made your entire week in one day. For some people, that's an entire month. If you had patience. Patience. That's what we're stressing this week. Have some goddamn patience. Let everything develop. Plan the trade the plan. No setup, no fucking trade. It's that simple. That's what we're doing this week. All right? Justin,
is that what we're doing? Is that what we're doing?
Yeah, that's what we're fucking doing.
All right, cool. We could do it.
Yeah, that's what we're fucking doing.
No, I'm down. I'm with it. I mean, I preach the same thing. One trade a day is all it takes.
That's
it. And then you just be patient with it. Just real simple.
Think about all those times where you remember that you overtraded. You remember when you gave those gains back from the morning because you got greedy. All those times. If you didn't do that, think about where your account would be now. Just think about it. Think about where your account would be right now if you didn't give all that shit back. Even if you only gave 10% of your profits back, 20% of your profits back, so you were still green. Imagine if you didn't give all those back. Where would your account be now? Would you be where you want to be financially? Would you have exceeded your goals? Would you have hit your goals? Right? Think about that. Less is fucking more in this market. Always. Always, always, always.
Especially
Let's
now.
make trading boring again.
I mean, this isn't, like after COVID crashed, we're just running it up with the bulls anymore. Like this is definitely going back to, this is definitely going back to
trader's
the
market.
Yeah, definitely going back to the market that it was when nobody was, when retail really wasn't in the market.
Mm-hmm.
Like that's what it's going back to now. So you just have to be ready for that and understand that.
You have to realize with quantitative tightening now, it's not quantitative easing, quantitative tightening of the Fed, their balance sheet and rates, like there's gonna be this contraction that happens. I told you guys last week, go and look at all those fucking SPACs, all those fucking growth stocks, all that shit, right? All that shit that went crazy. The PLTRs, the NEOs, right? The fucking DraftKings, the fucking all of them, all those things that went parabolic, right? Lucid, all those crazy fucking stocks. Where are they all at right now? We got a ton of indices at all-time highs, and you've got all these stocks just beating to shit. What is that telling you? That's telling you that this is the true value of these stocks. So hold off on buying the fucking dip. Okay. Chill. If now is the time where you want to load up some long investments, get cash ready. See where the fuck we're at. See what's going on. Because imagine if you would just on DraftKings. Imagine if you would have bought at 50, then you bought at 45, then you bought at 40, then you bought at 35, then you bought at 30. And it just keeps going down and down and down and down. Just chill. Nothing's going to go up forever. Nothing's going to go down forever. But there is going to be a huge buying opportunity, and we're all going to fucking, I'm telling you, we're going to take all the fucking cake on it. Shout out Jim. He caught Jim for running that goddamn channel, right? He's giving you guys long swings, dividend plays that are great, right? And you just want to do starter positions right now. Like, look at this is the same shit with CHPT. It can't get going. So if you start adding and taking little nibbles here and here and here, that's good. But if you loaded the boat at 30, right, you're almost 50% down on a swing in like a month. Okay. You have to chill. You have to do less. You need to understand what's going to happen in the market in the next few months. Okay. I talk about this all the time. It doesn't matter if you invest 100,000 in CHPT right now. If you did it at 20, where if you could wait 6 months and put 100,000 in at 11. Now, I'm not saying it's going to go to 11. I'm just saying if you can be patient and get a better price, do that. You would do that. We'd all do that. That's just common sense, right? So just chill. Who cares if it bounces from here to 20 and you're like, well, Chris, it was 16. I could have gone in at 16. Oh, and you're all upset. And I'm like, it's still a good buy at 20, but why would you buy at 16 when it can go lower? Like, why? Why would you buy at 16 when it can go lower? I mean, this is what the weekly, that's an outside week right there. That's an outside bearish candle to the downside. And to me, it looks like 11 is the next point, like next place it's going to go to. I made up 11, but it looks like it. I mean, yeah.
They're all 11.
I made up 11, but it looks like 11, right?
Probably hit. Yeah, I could probably hit off of here first.
I'd say 15. And then, so I'm like, guys, everybody chill. Okay. Do less. Do fucking less. Always.
Yeah, definitely don't go heavy in this market right here. This is definitely going like light, and then also if you're going light, then you're not going to be so pressured to cut it right away.
Emotionally,
yeah, you're going to be definitely not so emotional with it. So, because like we said, the volatility is going to increase this week. So,
yeah, you're going to see it, guys. When the VIX gets above 20, weekly options, specifically call options, get fucking blasted. I mean, blasted. There's no reason for you to be loading long on weekly options, especially calls when the VIX gets going.
Looks like it wants to go up.
The VIX, to me, it looks like it is ready to get going back to 25,
Yeah.
maybe 30 if shit starts getting real volatile, right? So don't load up on your short-term calls. Don't buy every Tesla dip. Guys, Tesla is a great stock to trade options on if you have a massive account. Okay, very, very. You're buying 200 points out of the money. You cannot afford that stock. I'm sorry. No other room's going to tell you that. No one's going to tell you. I'm going to fucking take it off all your chins right now. If you have to buy 200 points out of the money because that's all you can afford, you cannot afford it. So don't. So don't. Okay? It's very simple. There's many other stocks that we can play that are much better. Okay? For the risk to reward are much, much better. There's an outside bearish week. It's probably going back to 950. I mean, honestly. Where's the 20-day at? Oh, that's scary. 942, 950, right? Just chill. Let the market show us where we're gonna go. Go to while we're here, go to Amazon. Because this is like, so you guys know, if we decide that like, okay, this is when the market crater is going to happen, we're going to lose 10% because we're up like over 20% year over year, which is outrageous. If we lose 20%, that's not the craziest thing, right? Look at this fucking Amazon, though. I mean, make it a little bit taller,
sorry.
Justin.
So
no, you're good. Oh, yeah. Okay.
Yeah.
I mean, under 3170 is pretty much 3,000. Under 3170 is 3,000. Okay. But underneath Friday's low, which I think was like 32.30, something like that. Was that what it was? 32.20, something like that. We got the 4 hours to tell us. Yeah. So underneath Friday's low, you would have 32.40. Yeah, you'll definitely have some downside. I'd say you have about 50 points down to 31.70. So that's what I'm looking at, guys. I'm looking at, hey, if shit hits the fan, I'm looking at what the hell has a free fall in them. To me, it's Amazon and it's Google and it's Tesla. All three of them. But I'm not just going to go buy super out the money puts on a pop until I figure out that that's actually what's going to happen, right? So, yeah.
Let's try 30-minute.
Looking bearish. Oof. Got some consolidation, though, which is nice.
Yeah.
There is some consolidation. But, like, I'm not looking to long anything crazy right now. That's not it. I'm looking to see what the market tells me how the fuck it's going to react. We saw what it did after the minutes. 120 handle fucking drop on ES, or pretty much 100 handle drop on the SPX. And then we consolidated. Do we bounce? I don't know. But if we bounce, I'm not taking calls unless we confirm over 470 on SPY or 47.12 on ES or 47.20 on my SPX people. I've got some people getting on the SPX crack with me. So I'd say about 47.20 on SPX. Okay. 46.50 on ES to the downside is another 30 points. Under 46.50 is 46.20, then 46.8, or then 45.85. I mean, that's way down there, right? Bradley says, pop and fade tomorrow. It's almost a layup. Don't smoke the layup. Bradley said it first. Don't smoke.
You also gotta think, like, Elon sold all that money, all those went cash. Yeah, Bezos going cash. So like everybody else is going to go cash eventually as well.
Microsoft CEO went 50%, right? Like liquidated.
So now you have the lower
liquidated.
Yeah. The lower rich people are going to be liquidating too.
How many people were buying calls all last week? Buying every dip, got their shit slaughtered. Right? Just chill. Guys, when the 10-year, just to go to the 10-year. The 10-year yield, a rate at which people like, okay.
Dude, it broke out. Major
Yeah,
breakout.
it's the huge breakout. It's going over 2, in my opinion. If not 2, it's going over 2. So
Inflation.
what does this mean, guys? This is
Dude, look
the
at that
10-year.
flag.
Yep. So basically, this is the 10-year treasury note, which is also known as a bond. Now, if someone says, hey, Chris, like let's say I got $100 million portfolio. I got $1 billion portfolio because people have it. Okay. And they say, hey, Chris, the rates are going up on the T notes are going to 2%. 2%. We would advise you to put 100 million of your portfolio, put 100 million and lock it in at 2% over 10 years. I don't know about you guys, but I would take 2% on 100 million. I mean, any day of the year. That's 2 million a year passive income. Not passive. That's very, 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 sorry. That is very safe. It's not passive. You'll actually be earning that income, but you'll be holding it for 10 years. So it will be not active income, right? So look, you could make for 10 years, you can make 20 mil if you just let 100, if you just let 100 million sit there. Okay. Yeah. Bradley says in our office, so guys, Bradley's in the private equity space, very smart. He's BK Sowell in the group. He says their analysts have it projected at 2.35 to 2.5. I'd say that's pretty fair. I'd say it's going to be at over 2 by the end of this quarter, this first quarter of this year, especially if they do rate hikes. If they do rate hikes, as soon as the taper is done, we're definitely going higher. Definitely going higher. So what does that mean? That means it is more incentivized for people to take their money out of the equity markets, i.e. the stock market, and go put it in a treasury note, a bond, which is known as the safest investment ever, right? Imagine if you put $1 billion in. There are people that have almost $1 trillion in like capital, or not capital, sorry, investable like assets, right? That they could actually invest.
Borrow against, yeah.
Yeah, so imagine if you put $1 billion in a 2-year note or a 10-year note at 2%, at 2.35, at 2.5. So when rates go up, okay, that's when people are going to take big sums of money and put them in less risky investments because it makes sense. It makes sense, right? That's why when the TNX goes crazy low, that's when you see growth stocks get a lot of love. Because a lot of people have more money, they see more upside with less risk than getting in on a T note that is fucking 1.18, 1.2 or 1. I mean, it went below 1. Look at it, it got down to 0.41. That's crazy low. That's why the stock market ran like crazy. Okay. But now that we've been tightening up, you see the market's been a little bit more volatile as of recent and been tightening up and not getting all-time highs every fucking week, right? So now you can see we're probably going to see some downside if this continues to rise. The huge spike was off of the Fed talking about rate hikes, though, for sure. I mean, one thing that you could play. Oh, go ahead, Justin. Go ahead.
I was just going to say, this is probably the most bullish chart we've seen tonight so far.
I know. really, though. I mean, it is primed. It's primed for a nice breakout. I'd say up to 2, about 2. I'd like. That's the way I like. But you'll also see, guys, XLF, the financials weighted sector of the financial weighted sector of the S&P 500. So think about your Citibank, JP Morgan and Chase, Bank of America, Goldman Sachs, Wells Fargo, et cetera, et cetera, et cetera. Why are they breaking out? Why are they breaking out, right? Why are they breaking out? Well, when rates go up, it's the amount of like money you can borrow, right? At what rate, right? So because the rates are so low, like they're 0.25 right now. The rates that you can borrow money at are 0.25. So when we raise them, you're allowed to borrow so much money right now for basically free. So when we raise them, people aren't going to borrow as much. But banks still make money off the money that is borrowed, and they make more off higher percentage interest. So banks were very bullish on the rate hikes. A little more bullish on when TNX goes crazy too. Okay. So, I mean, you look at Bank of America was a huge play. Citi was a big play on Friday. I think they all really ran, but a lot of people made money on the banks, which was good. So, guys, it was, when we said when inflation is high and the rates go up, money goes out of growth and it goes into value. It goes into value. That's why growth stocks are beat to shit right now. TNX is up. Inflation is up like crazy, right? We're talking about rate hikes, okay? Understand the bigger picture and you'll know where to play and put your money, okay? It's really, really, really simple, okay? This is not something we overcomplicate. Sitting Bull says, last time the Fed reduced their balance sheet was from 2017, 2019. You could check out the SPX in that time period. Yes. Yes, when they want to reduce their balance sheet, okay, that, in my, opinion, that's bearish. That's bearish. Justin, go pull up SPX. We'll just go look at it real quick while we're here. Guys, like we said, we're not going to have a crazy watch list for you tonight. This is more of a time for you to figure out, to understand, our logic, understand the market right now, understand what to expect, okay? So let's pull it up. Let's zoom it out a tad. Are we on the weekly?
Yeah.
Weekly's good. Yeah. So go to 2017-19, and we have to scroll back a tad. Yeah. So we saw some dips, 2016-17. So overall, that looks like a fun market to be in my opinion. Because it was still following a trend. It's holding the 100-day, which is nice. But to me, very volatile. Very, very volatile. You see these, and this is a weekly chart, guys. This is a weekly chart. Remember that. The daily, you go to the daily, it's probably even more nutty. Yeah. Where are we at here? We have to scroll back, huh? Oh, it doesn't let us go back?
Oh, I was just going too fast.
Oh, slow. Chill out, family. Yeah. So you guys see these drops? These are 500-point drops, right? This one was a 1,000-point drop. 2018, 2019, right here. Very volatile. Very volatile. Sitting Bull. Thank you for pointing that out. Very good. Now, Jason says, I had XLF on my watch list. Very nice, Jason. I think I saw you post about it in the chat, and I liked it. Yeah, very, very bullish. Now, obviously, guys, XLF has run, so we don't want to chase runners, but watch it. Watch it. It's a good thing to watch. Okay. Very good thing to watch. Now, as far as moving forward, tomorrow will be a big telltale day. To me, we should either bounce massive. Okay. We should bounce massive, or we're probably going to head lower. And the only thing that could save us now is Powell, in my opinion. Now, does he do that at his hearing? He's testifying, meaning he's being asked by the Congress. Pretty much he's gonna get grilled tomorrow. Tuesday, excuse me. He's gonna get fucking grilled. Okay. So does he try to explain the quantitative tightening process? Does he leave it alone? Does he wait until January 26th, until the next FOMC? I don't know. Kapil said BAC just broke out an all-time high. Yeah, I think, Kapil, if I'm not mistaken, you played the calls in the morning, a couple layers on them. I think you killed it. I think you were done trading for the day. Yep. Yeah. Okay. Then Bradley comes in and says, don't chase bakes right now. Typically dip going into earnings will be some better opportunities coming up. I agree completely, guys. We don't chase breakouts. We don't chase breakouts. Okay. We don't chase and we don't diamond hand shit. All right. Kapil got ahead of the breakout. He was in early. All right. That's good. That's really good. Now, What earnings are coming up this week? Anything we like? I think it's probably gonna be pretty light. Tilray I like, but I hate it because I think it's a heavily manipulated stock.
Albertsons.
I'm not a fan. Albertsons? Oh. How did our
interesting.
How did our remember we were looking at Bed Bath and Beyond. What was the other one? Kroger? What were we looking at last week for the earnings? Fuck, I wonder how those did. I don't think they did well. We probably would have caught mention of them.
Dropping, popping.
Poppy droppy. Boy, look at that. That was a big fake out breakout. That caught somebody offside. It's bad. Walgreens and Bed Bath and Beyond. Yeah. So what's
someone
Walgreens?
bought here?
Yeah. What's Walgreens again?
The WBA, right? WBA. Yeah.
Pop and drop. Interesting. What is this? Oh, the 4 hour. Yeah, pop and drop again. So those yep, thank you, Brian. Yep, those were it. So guys, I think we're starting to notice a very big trend here, especially on earnings. It's been a lot of pops and drops, and earnings aren't about beating. They're not about beating the current EPS target or estimate, okay, that the analysts set. That's not it. You could crush that. It's all about the guidance, okay? And the guidance is, what is the outlook? What can we expect for the next 4 quarters? As an investor, you got to remember, people that are buying these stocks, a lot of them are very long-term investors. They want to know what the fuck is going to happen in the next year, okay? And now, get ready for all of the fucking earnings call to include this. If rates go up, the money at which we can borrow, and a lot of businesses, they need short-term loan and financing to float their operations because they're on an accrual accounting basis, right? They're getting money coming in as the months go on, right? So they finance their expenses up front and then pay back the short-term loans because money's so cheap to do that. They can also take this money very cheap to expand business. They can take on debt that's so cheap to expand marketing efforts, to get mergers, to buy other books of business, et cetera, whatever it might be. Now, when they can't do that anymore because it's more expensive, they're going to pass that off to their consumers. And when the consumers don't have disposable income, they're not going to buy the wants. They're only going to focus on necessities. So a lot of these small growth stocks, our outlooks are not going to be good. Big tech outlook is probably not going to be that great either. Just being frank with you, right? Now, that doesn't mean we can't rip back to all-time highs this week. We could do whatever the fuck. I'm just telling you, look at this is what, from a macro level, you need to understand, okay? You need to understand the macro side of everything, right? So, I mean, really, guys, that's all. I mean, that's all I have. That's all Justin and I were really talking about before. Like earlier today was kind of the same thing. Is like, we really need to wake up in the morning and see what the fuck is about to happen. Okay. I could give you guys a watch list tonight, but we could be down 80 handles in the morning. We could be up 100 handles in the morning. We could be up 40. We're down 8 right now, right? We're down 8. Okay. We could be down 50 when we wake up. I don't know. Everything could gap the fuck down insane. I don't know what that, I don't know. And we have these, these events. So we always know when there's news pending, what happens? We get range bound. The most boring way to trade. As traders, we love volatility. We thrive off volatility. We need volatility. Well, we lose all of that when the Fed talks, when there's news pending, right? So we're just going to fucking chill.
I feel like it's definitely going to hit the trend.
Everybody fucking chill. Most definitely. I agree wholeheartedly.
Yeah.
So, as far as my watch list to y'all, I might have a little something more in depth in the morning, but I think this call was important for everybody to just get a little bit more educated and some information on the macro side of things and to understand the bigger picture of what's going on in the market, right? So I hope you guys enjoyed that. But
Yeah, because we don't want, I mean, we don't want to give you guys, all these watch lists. You're like, buy this long, and then the market keeps going down. And it's just like, there's no point in that. Like, obviously, you can still take things long. There's going to be things that you can buy right now that in a year, 6 months, 3 months, they'll be up. Absolutely. Of course. But better to play things light, add in, if you're going to start taking something long, add in on major supports, like the 200-day. If it's coming back to a major breakout point, you could start adding in very little and then just see what the market's gonna do, because there is going to be a major correction at some point. I mean, if you look at SPY, it like literally has not had a correction. I'd say this is the last major one.
Chart. Guys, think about this, Justin.
Since over a year, I would say this is the last really major correction.
It wasn't even a correction.
No, it's like a pullback. Yeah,
it just held to the breakout retest. Make it a little bit taller, just a tad bit taller, so they can see. Really, guys, you don't see this. What was the low? 2 something? What did it get down to?
Oh, over here.
208, 29. Okay, so we went 219 to 480 on an index. I'm sorry, on an ETF. Excuse me.
In a year.
I would say a year and a half. Really,
you're right. You're true.
Yeah,
you're right. Year and a half.
Yeah. But still, even in just a year, it was almost 100%. When was the last time, if you bought at 219 and sold at 438, right? 438 would be 100%. Like what? Like, where else would you do that? I mean, I couldn't fucking tell you. But I could tell you this. What goes up must come down. Okay? Now, I'm not saying the world's ending tomorrow. I'm not saying we're going to crater tomorrow. That's not what I'm saying. But you need to understand the bigger picture in that not everything's going to go up. The amount of stocks that are underneath their 200-day moving average and our indices are at all-time highs has to be knowledge that you should obtain. You should know that. How the hell do you know? How do you understand the smaller picture if you don't understand the bigger picture, right? That's what we're trying to say. So just know that we're stressing to you. This is less is more environment. This is a snatch and grab environment. This is not buy and hold super long. Okay. This is let the market tell us where the fuck we're going to go. And then we make money off it. Very simple. And this is very, very simple.
And as you start trading and go through the years, you're going to have years where it's like, holy fuck, everything seems to be running. We're super green. Everything I touch, we're just making money. And there's going to be years where it's like, it's not going to be as good as the year before, So every single year trading is completely different. Investing, you have to understand that it's just from month to month, from week to week, always different. So,
dude, I would say from like, we went March 2020 all the way up to really I'd say September, like a straight fucking vertical line.
Yeah.
Straight vertical line up. Had a little bit of turbulence there in September and then rocketed back up for almost another year. Right? If you look from August, September, all the way, now go over just 2 clicks down there in September. And now we started seeing some more volatility here, right? Like, the last 2 months of our market has been very different. Like, if you just go to the daily, as this is SPY, right? Yeah, go to the daily. Look how volatile these 2 months have been since November, really, since November versus every month prior to that, right? Take November all the way till now. That's very volatile. Then look at every month prior to that. It's just pretty much a straight line holding the 50-day. That's it. Holding the 50-day, holding the 50-day, holding the 50-day. And then we finally had some crazy volatility here. And now the Fed is finally talking about inflation, no longer transitory, rate raise, balance sheet, they're giving all the signs that something might give here. Okay. Something might give. Jason says, I like it straight up like this. Well, we like it straight up like this, Jason, and we like you. He says margin debt is at an all-time high as well. That is true. That is true. Somebody's asking about a ticker. We might take, hold on. Felipe says, is SPY X the same as SPY, just a cheaper alternative? I don't know. SPY X? I've never even heard of that. fossil fuels.
fuel reserves. No, that's a different. That's a
I don't know,
fossil
maybe
fuel reserves. Top
this
fossil
is
fuel
the
companies.
this could be fuel
This
or energy.
is
And this could be part of. It's not the energy ETF. That's XLE. SPY X. I don't know. Yeah, I'm not sure, Felipe. SPY X. Maybe it's a different ticker. Not sure. Excuse me. Yeah, that's interesting. Yeah, not too sure. Never mind. Chart looks exactly the same. Oh well. Okay.
It is a greener version of the world's first of SPY, removing the big oil companies, leaving SPYX with 2.5% exposure to energy compared with SPY 7%.
Okay. Not sure what that means.
So they took out it's for the green movement.
Like the more fuel, like fossil fuels, like
yeah. So they don't have the big they don't have like the big oil companies.
Oh, like gas.
And in the CTF. They have more greener alternatives.
Maybe he means SPX. Now SPX is the indice, is the S&P 500 indice. That's definitely more expensive. That's gonna be more expensive. But it could be, Jason. Not too sure. Sorry for the confusion. No problem. Good question. Someone says, can we look at BGFV? We don't want to do a big ticker review right now, guys, just because. I mean, we'll look at it. BGFV. No, I'm sorry, FV. But maybe we'll do something. Yeah, FV. Maybe we'll do like an additional call this week where we just do like a straight, just like Tuesday tickers, and you guys just drop a ton, and we'll just go over and look at them. But like right now, all the stocks are going to do the same thing. They're all going to follow the indices. So, we want to just make sure, hey, we know where the fuck we're heading before we start trying to get too short, let the news and let the volatility take us where we're going to go. Now, this is Big Five, right?
Yeah.
Oh, wow.
That's interesting.
This is interesting. What's that big ass spike in November? Is that just Omicron? I'm sorry, Delta. Oh no, wait, Delta was the year before. Wait, hold on. Why that big ass spike? I wonder if they got earnings there. That's interesting.
They got squeezed, I think. Remember that big squeeze on Big Five?
Oh, that's right.
Yeah,
it probably was a big short interest on it.
Yeah, there was. Yeah.
What's the overview? He said, can you give an overview on BGFV? My overview would be this. I haven't shopped there since I was like 12. I think I bought a pair of rollerblades from there. I'm just kidding. I don't know. As far as I go, if you're long, like, do you go long it now? Do you not? I don't know. Well, I can tell you this.
Are you playing options, comments?
It's underneath everything. Okay, except the 200-day, and I don't even know where the 200-day is.
It's right here. It's underneath it. Here's the 200. It's underneath everything.
Wait, which one's the 200? Oh,
this one.
Oh, the yellow one. Oh, usually it's blue. I was tripping. Yeah, we're underneath it. So there's like a rule. Oh, and then look, did the 20 just cross the 50? Is that what I'm saying?
No, the 20, it's crossing over the 20 right now, or trying to at least.
So if that 50-day crosses over the 200, isn't that the golden cross?
It's the death cross.
Death cross. Golden cross. Death cross. Yep. Bradley says meme stock highly shorted. Oh, well, if it's highly shorted, that would be one you got to look at day by day then. And
absolutely.
You just got to see if there's chatter on it and there's volume behind it, then you never know. They could fucking squeeze anything at any time. Just depends if it gets the visibility.
Yeah,
really.
Because at that point, it's not really playing off of technicals. So if everybody's like, oh, this is a squeeze play, and there really is like high short interest on it, and there's like 1 day to cover for the shorts, 2 days, whatever, and everybody gets together to squeeze it. Yeah. So really no point to look at the technicals on the chart. You just have to wait until you start seeing that volume come in. And if the volume starts exceeding the average and you're seeing that chatter, then that's the time to buy into it and then play it then.
Yeah. So wait for confirmation.
Yeah. So a lot of these squeeze plays or stuff like that, you can look at that. But if you're honestly, TA works, like you're playing TA more for fundamentals than you are playing for these short squeezes. Because the short squeezes could have, like, it's not based off of the TA. If everybody wants to pile in volume and pile into it, it's going to run. It's going to run. You know? So
No, exactly. Hopefully that was a good explanation for you who asked that.
Yeah, so we could throw it on the watch, and then I'll keep it for the morning and see.
KL asked that. Hopefully we answer your question. Yeah, it's a tough one, man. Yeah, we don't know if you're playing options, if you're looking long or whatever. But if it's a Mimi, then yeah, I just wait to see if there's some chatter behind it, and you'll know by like pretty much like pre-market volume will really tell you, right, Justin?
Yeah, so you'll probably see a big jump in pre-market, and then that's how you'll know, okay, this was going to be
like it's like you've got some visibility.
But yeah, I mean, so if it looks like you've done pretty much DD on it, and if you feel it is a very good squeeze candidate, then you can absolutely start running, scaling in here very light. What I would do, obviously, I would cut if it ever went below 1690, but I would add in light all the way down to maybe 1830 and then hold it just very light. So yeah, I would scale down to maybe 1830 on this one.
You got that. What is that? The daily, that MACD crossover is nice.
Yeah.
I on the daily off a technical, if we're gonna play a technical side, I want to see that get above that signal line.
Yeah. Yeah, I would really say at 1813 to 1830 scaled down into, if you'd like, but nothing lower than that. And then just wait for the squeeze if that's something that you feel strongly about, for sure.
I wouldn't full port it either.
Exactly, because if it's gonna squeeze, it's gonna run a lot. So you don't need definitely don't risk a lot of money in that. So I would say scale down to probably 1830. It looks like at the 1 hour, 1872. It's a big support. Let's see.
Justin, what do you think about a because
I'm still gonna say 1830 right here. Yeah, I'll still say 1830 to scale
Justin,
down.
What do you think? What would you think about on Thursday? Maybe we could do a Thursday lotto call, but we could also do like a ticker overview day, maybe, because we'll have the Fed news out, or we'll have Powell on Tuesday, CPI on Wednesday, and then we'll see the action, and maybe we can give some insight on some tickers, and we can maybe do all like the FANG stocks and some of the stocks that we like.
We could do that. Do you want to do it Wednesday or Thursday?
We could do it. Let's do it. Maybe we could do it Wednesday because the data comes out in the morning.
Yeah, we could do it Wednesday then.
We could just look over some of the big board names, some of the popular names that we like to play a lot in the group. Give some scenarios and maybe just give some technical side and some TA behind it, and that be a little bit more in depth. But we're still, guys, every morning we're still gonna be like I'll be giving out. If you notice, I've started moving mine until about 5:45 my time. I have a pretty good vision of what I think is probably going to happen for the day. I get to see the pre-market movement as well. I usually put out my little watch list then for y'all. So I'll keep on doing that. But we know, the sermons used to be very long with many, many tickers that get looked at, which you guys like. So maybe we can like do that. We could do like a little pop-in one. Maybe on Wednesday. That sounds good to me.
I'm down with that. Yeah. So I mean, a lot of these groups are still going to play because they don't understand the market as well. So they're going to keep playing how it was in 2020. They're literally going to keep putting out watch lists and keep trying to play the market the same way. So I'm glad you guys are with us because we're going to keep it real with you. And
that's really all I got, man. I hope you guys enjoyed this. Like we said, look out for pre-market. We'll have some more data out to you guys then as far as like an actual watch list of things that we might be playing. But guys, we're really going to be just chilling. We're going to let the market show us like what it wants to do. Really, we could be range bound tomorrow and Tuesday into Powell. I mean, that's very, very possible. Logically, I would say that's stupid because I don't think he's going to address like the minute stuff in the hearing. I think it's going to be more inflation focused. That's usually what the Congress and the Senate really grills them on. And then Wednesday CPI, that'll be a telltale. Is it come down? Does it not? We don't know. We don't know anything. So why take the gamble? Why take the 50-50 shot? Just play the action that comes after, right? Just play the action that comes after.
I will say, if you do want to take things long, Joshua has good shit in the long in the long swings
Oh yeah,
channel.
yeah.
So those are, I like we said with this market, I would say even add in light there. But those are some good long swings if you want to take some things long. Absolutely.
Yeah, we are actually, guys, we're gonna be doing we're gonna get him live on a Zoom call with y'all to do like a little presentation, little questions and answers too on a lot of the um a lot of the like dividend investing, long-term investing, Roth stuff. So he's just going to give a big breakdown on like how he does it, what he looks at, and all that kind of stuff. He's very, very, very smart, guys. So we're excited. We'll bring that to you guys. And then this next coming week or the following, a good friend of mine who is a strategic tax planner for small businesses. He is going to be coming on live with y'all to talk about different taxation exemptions, things that you can write off, shelters, because we all are going to have to pay taxes this year, right? So we're going to bring that to y'all. He's going to go over some ways that you guys could save on some taxes, some things you can deduct, some investments that help. He's also works for one of the biggest luxury brokers here in Los Angeles. So he's going to talk about the real estate market as well and how a lot of his clients use real estate to help with tax shelters, help for write-offs and all that kind of stuff. So very excited for that portion for you guys as well. I'm sure you guys will all like that. But yeah, I think, did you want to look at something, Justin?
Oh no, this is just one of his plays. Like I said, this is obviously looks very good that you could start adding in here to take long. So he has a bunch of plays in there. Check those out. If you do want to start grabbing things long, this is definitely one of those that I would grab long. I think I'm actually personally going to grab long as well. So
yeah. So Bradley says, I know we don't want to do a lot of tickers, but let's look at XERS. I got some info I may share. Okay. Bradley's like our insider trader, guys. He's like our Nancy Pelosi. No, I'm just kidding. No, guys, but when Bradley knows what he's talking about. So let's take a look here. What do we got?
20's crossing.
Xeris Biopharma, interesting.
That's a good trade.
Everything's crossing over. I mean, the nice stair steps up, higher lows.
What's the insider info?
Yeah,
what do you know?
What's the info, Bradley? Do you spill the cheese may? He's not going to type anything, you pussy. I'm just kidding. But if you look here, guys, just on a technical standpoint, nice stair steps up. Couldn't get through the 20-day initially, got through. Couldn't get through the 50-day, got through. Now it's at the 200-day.
Yeah, it looks good.
Right? Interesting. Looks nice. Wow. Dude. That doesn't look like that's a bull flag. It's a possible breakout. Is that a breakout retest? Interesting.
Yeah.
We always seem to get that. The old breakout and retest. Yeah, we'll see. We'll see if Bradley gives them. Okay, he says, I think 5 or 6 is coming, direct connection with the CEO. Interesting stuff. Bradley knows a lot of big time people, so I wouldn't.
Let's just say Martha Stewart bakes for him on the weekends.
Yeah, for real.
Some of y'all might not get that.
Yes, yeah, I know. If she doesn't know who Martha Stewart is, she's too young for you, bro.
Yeah.
Okay. That's funny. You might not get the Nancy Pelosi joke either. All right, but that's what Bradley said. So we'll keep that on our watch list, bro. Thank you for that info. Other than that, guys, we'll log off here. Appreciate y'all rocking with us. Appreciate y'all taking the time to tap in. Look out for us bright and early in the pre-market. We'll get some more info out. Obviously, we'll probably be in the Discord for the remainder of the evening as well. Love you guys, and we'll see y'all soon. Peace.